Yo, what is going on, everyone? It is your boy, the Master of Coin, and guys, today we are back with a fantastic case study on USDCHF. This specific trade I'm going to be showing you guys and breaking down produced over 80% potential return on investment, giving you risk 1% on this trade. Now, I'm really excited to go through this, so make sure you got your notepad and pens because it's a proven fact. You're only going to remember 5% of the information we go through today. So, with no further ado, let's get right into it. So, what I'm going to do is, guys, of course, I'm going to show you the MetaTrader 4 executions, everything. But more importantly, guys, what I want to show you is the actual screenshot. Time and date stamps, October 20th, 12:52 UTC +1. So, what I'm going to do now is really break this down for you and show you exactly the thought process and really why we took this trade. So, firstly, starting off on USDCHF, the first thing I did actually do was analyze the dollar index and the DXY. Why? Because if I know what the dollar index is doing, I'm going to know what all the other US dollar currencies are going to do as well. So for now, I'm not going to go through the dollar index. Maybe we'll do another video about that in the future. But for now, guys, what I want you to understand is, yes, we had this prior level of supply here, which price obviously come and traded into. Now, to be honest with you guys, like, I didn't really pay too much attention to any of this other price action because you have to ask yourself, is it actually relevant to what I'm trading now? And that's another thing, because it's great. We can identify schematics, we can identify, all these different things, but you need to have a good understanding of market geometry. Where am I actually trading now, and what is the intention of this move that I'm potentially playing or forecasting that's actually going to happen? Because a lot of the times, right, we can be looking at moves, or we can even be getting taken out of trades, or even, just seeing moves in the market. But you have to ask yourself, what is the intention? Why is this move actually going to happen in the market? Does it make sense for this move to happen? And what I want you to understand now is, well, I'll show you. If we go to our 4-hour time frame, right, this will make a lot more sense. So, for example, we can see obviously price was trading to the upside, right? On our kind of on our 4-hour time frame, right, we obviously had low, put in a new high, pulled back, and then continued to create a new high in the market. Now, of course, you can be looking at the structure here. Now you may be saying, okay, well, Kieran, why are you not, looking at this structure? Well, hold your horses. I am looking at that structure, but that's just a different time frame structure. Every time frame has its own unique structure. If you want to know more about that, we've got a whole video on that on this channel. It's called The Secrets of Market Structure. But what I want you to understand now is, this is our 4-hour swing, right? This low to this high. Now, if price is now going to come and retrace and actually, come lower to go higher, what needs to happen on our lower time frames? Well, if we look on our hourly time frame now, you can see the lower time frame structure a little bit more clearly. And I'm going to mark it up for you guys in blue. So on our hourly time frame, right, we obviously have new high, higher low, higher high, higher low, and higher high. So in order for our red line, right, our slightly higher time frame to pull back and retrace, that means our blue line, our lower time frame, hourly time frame, is going to need to break some sort of structure to give the higher time frame permission to actually retrace. And this is what I mean by intention, right? What's the intention of the move? You see, if you're looking at this breaker structure here, yes, it's a breaker structure, but why is it a breaker structure? It's a breaker structure so that it can retrace to slightly higher time frames. And when it comes to structure, family, what I really want you to look at it and understand structure as basically supply and demand. And that's the reason why structure works. We have this hourly low, right? Hourly low that led to a new high, right? The ones that are highlighted here, from low to high. Now, the reason these levels work in the market is simply due to schematics. You see, we have an accumulation here. See, and this is what I mean by intentions. Now, what was the intention of this accumulation down here? Price accumulated down here, and it invalidated this prior distribution. So this is showing me now that demand had to come into the market here to push higher. So if bullish market structure is going to maintain, this level of accumulation should have pushed price higher to create a new high in the market. But what happened? This demand zone did not hold. So what does that mean? It now means that supply is in control, because the only reason the market went from this low to this high is because there was a greater volume of demand, a greater amount of buyers in the market. So for price to now come and push below this has to be a valid distribution. So, or of course, it could turn into a reaccumulation, but again, that's a whole other conversation for another day. But this is where, again, having those extra confirmations come in. Now, we understand that this broke. So, okay, if this is breaking now, where is this going to potentially retrace to? Well, we can see we've got liquidity, right? We've got this trendline liquidity here that's going to want to get taken. These equal lows, this trendline liquidity, and a lot of imbalance that price needs to come back and trade into. So let's look a little bit deeper. If we now drop it to our 15-minute more intraday time frame and we look at our structure, it's the same thing, right? So now we've obviously got this high that led to this low, which was on the hourly. But on the M15, we've now got structure within the structure. So if the hourly is going to give a deeper retracement, maybe up here or something, that means the 15-minute is going to have to break structure to trade up there and then continue to go lower, right? So this is what I mean by understanding market geometry, family. Understand the intentions and the way price moves. So what actually happened? We had this, larger hourly distribution up here, and then as price was obviously coming out of it, we now have a redistribution here. Again, how do you know it's a redistribution? Well, we can see we have a constant manipulation of the highs, manipulation of the highs, manipulation of the highs, followed by a break of structure to the downside, and that's what validates distribution. You see, distribution, guys, supply is literally just a manipulation of the highs followed by a break of structure to the downside. And again, you can also see how it did come and actually mitigate this institutional candle here as well. This is quite funny. Now, when it comes to the actual trade, because this is now a redistribution, you have to ask yourself, what is this showing me? Well, a redistribution is showing you an area where supply came into the market. So if this is an area where supplies come into the market, well, what does that mean? We can now potentially use this area in the future to be taking short trades off. And we can see, right? Price then came into, I believe, the 4-hour institutional candle. Yet we can see that price came into a 4-hour institutional candle. Again, why is it valid? Because it invalidated prior demand, cause and effect, right? There was some sort of demand that came into the market here. Doesn't mean it's valid to take trades off, but how do I know? Because price pushed higher, right? So that means there's an area demand came into the market. Simple. Don't overcomplicate it. And then for price now to come and drop below that, that's showing you that there's no more demand in the market. So we know supply is in control. We've got a narrative. We're looking for price to go to the downside. We're looking for it to retrace those larger time frames. So now, if we drop down to, again, our 15-minute, we can see very clearly now what happens as price trades up. And one thing I really want to touch on, guys, is the importance of waiting for proof at these areas. Because what a lot of people fail to do is wait and have patience. You see, I'm not looking to sell off this 4-hour institutional candle, right? This larger demand zone. Because firstly, right, my stop loss has got to be above the high. That's 26 pips. I don't want a 26 pip stop loss. And the target, well, even down to these equal lows, is only a 1 to 5. A 1 to 5 is not worth my time. I'll be real with you, right? My trading plan, I'm not going to take 1 to 5s. I need to 1 to 10 minimum. That's not to say that, you can't take 1 to 5s and be a profitable trader. Of course, you can. But my trading plan and the way I trade, it makes more sense for me to only go for higher risk rewards. Because look, let me tell you something. Once you catch your first 1 to 50 in the market, there is no such thing as trading psychology anymore. I'll be real with you. Because you realize, wait, I can lose 50 trades in a row, literally just win one position, and I've covered all of those losses. And to lose 50 trades in a row, mate, you gotta be trading drunk or something. So I wouldn't advocate trading drunk. Don't do that. It's not good. So what can we see that happens? As price now is trading back up into this area, who's in control? Demand, right? The buyers are in control. So I wait for that proof, and we can see that we have a very nice distribution in this area as well. And we can see, again, look, we have trendline liquidity that gets built, and I'll show you the screenshot as well. This was the one position entry. And this risk reward on this position was a 1 to 54.5. And I actually took another entry on the M15 open, right? The M15 institutional candle, last up candle before the down move. And that was a 5.8 pip stop loss with a 26.64 risk to reward. Again, fantastic trades. Total ROI of potentially 80%, obviously given on how much you're risking. If you're risking 1%, again, that could have been 80%. You're risking 2%. You're risking 0.5%. Again, you can do the maths. But again, I'll show you guys the execution, timestamps, everything. If I do remember, I will put the MetaTrader 4 screenshot up of the execution. So yeah. From there, now the final piece of the puzzle was this trendline liquidity I wanted to see get clapped. And to be honest with you guys, I was looking at this last extreme level up here as well, potentially. And how I would have played this as well is this is where you have to play the probabilities. I was looking at this level, right, and it did make sense for price to come and react off this level. But I did have a last extreme level up here at 92,500 to potentially play a lower time frame distro out of, is if this obviously failed. But it didn't. And the reason it didn't fail is simply because of this. This was our last area of supply, right, that came in and invalidated prior demand. We have this institutional candle here, right, that pushed to the upside. But if this was a true demand zone, right, price should have then created a new higher high. So it failed to create a new higher high, and this is now a prior level of demand that is now a level of supply. And we can see that what happens, price comes in, trades into our zone, and again gives us a very, very, very nice reaction from it. Again, you can see the timestamps. Oh, that's my YouTube. Make sure you comment, like, and subscribe. But you can see the timestamps here for the position. Now, once the trade was executed, cool. What's happening now? Once you're in a trade, guys, what I want you to understand is that trade management is so important, right? If anything, trade management is probably more important than the actual execution of a position. Because when you're in a trade, family, right, what happens when you see blues on your phone, right? You're looking on MetaTrader 4, you're seeing profits, you're feeling good. What's happening, guys, when you are having emotions, when you're experiencing emotions, your brain processes reality differently. Dopamine, serotonin, these happy chemicals are being released when you're seeing profits. So now you're going to be seeing a distorted perception of reality. The last thing you're going to be thinking about now is, is the trade going to go against me? You're getting greedy. You're thinking, oh my God, I want to make X amount. I want to make X amount, right? I want to make 2, 3, 4, 5, 20, 50, $100,000 on that trade. And you're getting excited. But the last thing you're thinking about is, where can the opposition show up? And this is why I always look for my devil's advocate positions, right? If I'm in a trade, I'm always going to look at the opposite. So for example, we actually have this M15 institutional candle here. And what I like to do with these devil's advocate areas is I like to monitor price behavior. And the reason we do this is so that we can identify and basically conclude if we're going to take a greater amount of the position off the table, or if we're going to leave more on for price to roll over and potentially go lower. So what I personally did at this area here is I actually took 20% of the volume off. So what do I mean by that? You see, this actually completely covers your risk as well. And from there, where do I move my stop loss? Where I move my stop loss, guys, I don't just move my stop loss to break even, because if I move my stop loss, let's say to break even on the larger position, right? That's here. That's this black line I just put on the market. But price could still come a little bit higher to mitigate, stop you out, and then continue to roll over. So what is the purpose of a stop loss, right? Again, take it back to basics. Your stop loss is designed to be an area, if your trade's wrong, to take you out of the trade. So where can price return to if this trade is going to be wrong? Well, if I ended here, the last, area of supply that came in is just above this high. So what I did is I moved my stop loss here, and I call this now reduced risk. Because think about it. If I've closed 20% of the volume, there's no risk on the table anyway. And now I've moved my stop loss to, the trade's barely, there's barely any stop loss now. The risk is very, very minimal now. No, actually, no, there's no risk at all because we've closed the volume. So now, once we're in this trade, it's just a case now of holding it and really just having that patience and allowing the trade to play out. And we can see that price continue to roll over. And if we take it lower, it then finally came and met our targets, giving us that total risk reward 1/1 to 54, and then 1/1 to 26.6. Again, took our equal lows, took that liquidity, traded into that institutional candle, and obviously what's it doing now? Well, again, that's a conversation for another day. But yeah, family, that's pretty much it for USDCHF. Again, market geometry, family, is so important. Understanding the intention of the moves and why they're playing out, and the reason why they're playing out. Guys, the last thing I want you to understand is the market is literally a living being. Communicate with it. Ask the market questions. What are you doing? Why would you do this? What is the purpose of you doing this? You guys, if you're trying to impose the will on the market, that's probably why you're struggling, right? Opinions are always wrong in the market. But what's always right? The tape, the market, price action. So listen to it, communicate with it, speak to it. At the end of the day, family, this financial market is a language. It's talking to you. The question is, are you listening? And with that being said, family, I hope you guys enjoyed today's video. If you did get value, definitely comment, like, and subscribe to the channel. We've got a lot more videos coming out soon. And guys, if you do have any sort of, requests, any sort of concepts you want to see, again, definitely leave it down in the comment section below. I'm more than happy to do that for you guys. If you guys do want to know about mentorship, if you guys do want to know about courses, signals, all that sort of stuff, definitely shoot me a message on my Instagram account here. This is my only Instagram, family. I do not have, underscores, double I's, 5 million S's on. This is my only account. I'm not going to message you first. But if you do want to actually, learn how to trade with us, you want my mentorship, you want to get access to our community, our educators, our signals, feel free to reach out to this Instagram at IKDavis. I've got a link in my bio. You can hop on a call with me. And if you don't hear my voice, family, it is not me. So with that being said, family, thank you all for tuning in. Don't forget to comment, like, and subscribe. And I'm going to see you all at the top from the top because the bottom is way too crowded, man. Sheesh.